Doctors, if you want to build significant cash flow and financial freedom outside of medicine while paying less in taxes, then you don't want to miss the in-person Physician Freedom Summit this October, where 5-minute conversations could lead you to your next mentor, partner, or increase your net worth by millions. I'm Parambala Dandapani. I'm a radiologist, a mom, a real estate investor, and founder of GW Capital and Generational Wealth MD, a growing community of over 20,000 physicians whom I have helped acquire over $300 million worth of real estate. But just like you, for over a decade, I was trudging along the traditional W-2 path, overworked, struggling to balance work and life. Looking back, many of these speakers shaped my journey, and at the Physician Freedom Summit, you will be in the room having face-to-face conversations with these short-term rental gurus who've replaced their clinical earnings through their real estate while slashing their tax bill by hundreds of thousands of dollars, creative financing and alternative investment experts who became financially free in their 30s and 40s and together manage over $1 billion in assets. And you will get insider access to the wealth building strategies that they're pivoting to in this market cycle, while others sit on the sidelines missing out on this once in a lifetime opportunity to build generational wealth. I'm super excited about seeing all of you in person in beautiful California. I know this is going to change your life. I will see you there. Don't forget to sign up at generationalwealthmd.com/summit. Hey guys, I'm super excited because today we are talking about a new asset class, oil and gas investing. And this is very intriguing because for a lot of physicians, you've probably heard people talk about the tax benefits you get with oil and gas investing that you can use against your W-2 income, which is similar to what you've heard us talk about when you talk about short-term rentals. And you've also heard me say that the only way to reduce risk in your portfolio is to have multiple non-correlated assets, and that's where oil and gas comes in. We're going to join today. I'm joined by Troy Eckard. He's an educator at heart. He's the founder of Eckard Enterprises, and we're going to deep dive into the spectrum of oil and gas investing, what returns look like, what the risks are, and how tax benefits come into play, how you can use your retirement accounts. Again, we're always intentional about going into investment classes where you're not letting the tax tail wag the dog. So we're going to deep dive into risk and return profiles. We'll also talk about healthy asset allocation. I'm super excited to get started. Welcome to Generational Wealth MD's podcast on financial freedom through investing in real estate. My name is Parambala Dandapani. I'm a mom, radiologist, real estate investor, and mentor to others looking to start or scale their real estate portfolios. The goal of this podcast is to provide you with inspiration, strategies, and insight so that you can stop trading your time for money and live life on your terms. If you love the episode, don't forget to subscribe and leave a review. Thank you, Troy, for being with us.
Thank you for having me. I really appreciate the opportunity.
Guys, if you don't know Troy, and you probably heard him speak before, because like I said, he truly is an educator at heart. He's at 4 decades of oil and gas expertise, and his goal is to make direct ownership of oil and gas assets possible for high net worth investors. Since 2019, his company, Eckard Enterprises, has secured over $1 billion in capital across 95 projects, and that includes mineral rights, working interests, and they also have the second largest natural gas pipeline in the Gulf of Mexico. I'm super excited to deep dive into this topic with you, Troy.
Well, I appreciate it. It's quite a vast industry and it takes a lot to know it, but I think you and I can make this pretty simple for most sophisticated investors to follow.
Love it. Love it. Troy, let's start off with, I think the basic question, oil and gas investing, how can it provide physicians with portfolio diversification and, long-term tax efficient wealth growth beyond stocks, right? Because most people, I would say 90% of professionals are stuck in that stock bond portfolio, which is the traditional retirement model. How should they start thinking about oil and gas investments?
Well, what I notice most about medical professionals is that 95% of everything they do all day long is they have a barrel of oil in their hands. The plastics, the synthetics, the syringes, the masks, everything you use in the operating room in the hospital, literally 95% of it is coming from oil and gas. And what they always say about investing is sometimes the right answer is right in front of you. And so when we talk about oil and gas as an investment, we have to look at what the lack of oil and gas in your portfolio does in terms of offsetting other asset classes like stocks, bonds, and real estate, which act negative correlated to the price of oil and gas. When the price of oil and gas is inexpensive, the economy booms. Cheap labor, cheap manufacturing, cheap transportation, cheap utilities means more profit for companies. When the oil and gas price is higher, it means those asset classes do less favorably. So if I'm a physician, a farmer, an engineer, a banker, financial planner, I'm looking at truly a diversified portfolio, and I'm asking myself, if fossil fuels and oil and gas makes up roughly 75 to 85% of all energy use in the country, but I don't own it, well, what may be the balance? So the reason why physicians really should be looking at oil and gas, it's the perfect investment for somebody who has a busy life, family and profession, and they want income being generated every single day, and they're not even aware of it. It just is a check that shows up every 30 days. So it is what I call a true passive investment where you can't trade it. You're not worried about markets. You're not worried about Trump coming out with a tariff. You're simply making an investment, and you're letting major oil companies produce the wells, manage the wells, and send you a check every 30 days. That's why, to me, it's a perfect investment for those of us in the higher income bracket that want to retire.
Love that. Now, I know that there's a spectrum, as in real estate, right? In real estate, we talk about long-term rentals, syndications, all the way to short-term rentals, right? And so there's a spectrum, and it's a risk-return spectrum. Can you do us a favor and go in depth into what that looks like for oil and gas investments? Because you have mineral rights, you have active drilling, and there's a whole spectrum. So let's talk about the spectrum first, and then maybe we can deep dive into what the returns are in across that spectrum, and then the risk across the spectrum.
Perfect. Let's just break it down into two categories. Let's keep it simple for the audience. There's the headwaters, the beginning of every barrel of oil and molecule of gas produced in the United States starts with an agreement, a lease agreement between whoever wants to develop the oil and gas and the guy or gal who owns the mineral rights. So it's like being the casino owner. You can't do anything with what goes on in the casino till you decide that the casino owner is going to make some kind of a profit. So as a mineral owner, it is deeded and titled in the courthouse that you own a specific mineral right that's tied to some kind of XY coordinate and some kind of legal description. So to make it simple, investors have a choice. I want to be the house and I want to own mineral rights. I don't get to explore. I don't get major tax write-offs, but I take no risk, no capital exposure. But I'm going to get somewhere between 15 to 25% of all future income for every well drilled without any exposure to liability. Great, great investment predicated on one factor. You got to know the person that's letting you get into those minerals knows where to buy them correctly. Otherwise, you have minerals over non-oil and gas producing assets. The second part is where I think high income earners like physicians and medical professionals come in, which is, look, I make a lot of money and I don't mind paying the taxes that I owe. But if the Internal Revenue Service gives me rules and regulations that allows me to make an investment in drilling working interest in a well, and I can participate, and if I do, I can write 100% of the investment off against my W-2 or gross income. Okay, that I'm very, very interested in because it automatically gives me a substantial economic advantage by retaining the tax dollars, reinvesting it much better than the IRS can invest it into an asset that generates cash flow for 25 to 75 years. So asset number one, mineral rights. I own the real estate. Asset number two, I decide I want to participate in drilling the wells and I want the tax benefits and the long-term income. It's perfect for physicians in both ways of looking at it. It's just one is tax driven, primarily like working interest and drilling. The other one is just about owning assets in your IRA or in your regular account that makes revenue checks for 20 to 75 years.
Love that. And guys, I forgot to mention this, but Troy and his team, Eckard Enterprises, they're going to be at the Physician Freedom Summit. This is where we have, high net worth individuals. We have, syndicators, sponsors, people who are in real estate, doing short-term rentals and oil and gas and mobile home parks, everyone coming in to help educate all of you. So if all of this is new to you and you feel like you're exploring something that you want to learn more about, make sure you join us. That's generationalwealthmd.com/summit. It's October 6 to 8 in California. And you can attend virtually. So make sure you are joining us for that. We're going to do our best to deep dive into this as much as we can, but then there's more learning opportunities if you attend the summit. That being said, Troy, break this down. So again, like you said, a big part of this is who you work with, right? That's a big part of the risk and the due diligence in these assets. But if you work with a great operator and you're looking at mineral rights versus active drilling, can you give a range of where people can expect, what they can expect in terms of returns for each of those classes?
Well, so let's do two things. Let's define the industry, which is the oil and gas sponsors who offer oil and gas investments. I'd be willing to bet 95+% of the companies that offer oil and gas investments have no track record, no antecedents. They have no way of verifying who they are. And most likely they're bad actors. Why is that? Because the bait on the hook for wealthy investors is tax write-offs.
Yeah.
So you've got President Trump out there beating the drum, drill, baby, drill. You got every advertisement out there about the OBB saying tax write-offs. I'd rather burn the money in the parking lot than give it to the IRS. It's that mentality. So it makes high income earners very easy prey, right?
Yeah.
The second thing, though, is that when I look at any investment, whether I'm going to get a physician to do brain surgery and whether I go get a CPA to do my taxes, I need to know that you have weathered cycles, that you've been around long enough to establish credibility. It's really easy to look smart when you're going downhill. It's not so easy when you're climbing uphill. So the one thing I suggest for all sophisticated investors is you got to ask for very basic things. I need to know the antecedents on your company. I need a track record of your performance. I need to have verification of your deal terms to make sure you're offering something that's fair, and et cetera, et cetera. These are basics. But because of that big bait of tax write-offs, most investors, they lose their minds. They set aside practical due diligence and they chase that tax write-off. Well, let me explain the Internal Revenue Service's definition of tax write-off. It means they're giving you a deduction because you lost money. If you're with the right sponsor, like Eckard, and you participate in working interest, I prefer to call it a tax deferment. Why is that? Well, you'll get the deduction this year, but I'm going to turn your wells on in 12 to 14 months, and that should make all your money back over 48 months or even as quick as 12 months. You're going to get that income back, which means I just deferred what I owe later on, but now I have an income producing well. So if you have that mindset, then really oil and gas is about making money. The tax benefits are like getting dessert with your steak. It's just extra. And if you have that right operator, track record, experience, and antecedents, which is incredibly difficult to find, you have found the holy grail of investing in oil and gas. And that's what I believe Eckard is.
If you're interested in learning how to invest in long-term and short-term rentals the right way, so you can accelerate to financial independence with the support of mentorship, community, and vetted investor agents in strong markets across the country, then get on the waitlist for the next cohort of Creating Generational Freedom at generationalwealthmd.com/waitlist in lowercase. You don't have to learn from decades of costly mistakes by yourself. The program is only open for enrollment in the spring and fall each year. In the last 6 months alone, our members have acquired over $60 million of real estate, and more importantly, they're living life and practicing medicine on their terms. You don't have to do it alone. You know, you're so right, because I've spoken to multiple other operators, and it's very hard based on the information they provide to see what their track record is, right? So it's all smokes and mirrors. And so really being able to work with someone who has experience is very valuable. Let's talk about the risk across these different spectrums. I think you kind of touched upon it. You talked about mineral rights, you know, and that being a steady paycheck, and there's more risk with the active drilling. But anything else people need to know in terms of due diligence as they're thinking about investing in oil and gas?
Yeah, so the main thing is then I think this comes from a tax deduction consideration. So I would say probably 80+% of the sponsors out there raising money from high income earners into their projects, they have structured the deal so they've marked up the actual cost by 300 to 400%. If a well cost $8 million, they marked it up to $28 million. You don't know that. You write your check for 100 grand, not realizing you just drilled a dry hole economically. Why is that important to know? Well, the Internal Revenue Service is going to have identification codes. That well number, that assigned number like a social security number, is being filed by every participant in that well. If you're the participant that shows that I've got a K1 or a tax report in that well that shows I'm taking 3 times the tax write-off everybody else is, you're going to get flagged for an audit. If I'm getting information that's not concurrent with all the other tax filings tied to that ID, I have red flagged my own account. If I'm with a sponsor who has had previous partnerships that have been audited and failed, the IRS sees alternative assets as a gateway to audit you. So one of the things that I've done for 41 years is we've never had a single audit, a single IRS denial. We've never had a single client had the reversal of any of their tax write-offs in what we've done. Because why? We know that the IRS is smart. They go hunting for tax audits where you hunt for tax write-offs. So that makes it a very high auditable item. But if you have a track record like Eckard for 41 years that's never had a single elimination of a tax write-off or audit, it automatically means that any of my partners going through probably has the right information to file those taxes without having that concern. So you asked about risk. Risk is filing tax write-offs on assets that really put you in a position of having not legitimate write-offs and being subject to an audit. The second thing is, when you're actively participating in oil and gas, you're one of many partners or oil companies that participate in the well, most likely. Well, you got to be careful who you're with because at the end of the day, you're going to be accountable or liable for not just your share, but maybe the share of the cost of the well. You don't get just to be like in a condo project and walk away. So to me, as an investor, we're always worried about making smart due diligence decisions, but I'm also worried about what kind of spider web that I get involved in. And I can tell you, I've got my own forensic CPA that has looked at 45 different sponsors. I'm putting that report out probably in the next 7 days and say, here's everybody you can find on the internet for oil and gas. Here's who they are. Here's their site. I don't provide any kind of bias. I just say, look them up. And what you'll find is they're missing about 9 out of 10 of due diligence items. Other than the fact they have a phone number and a website, they won't pass. This is really, really important because you'll avoid most risk by picking the right sponsor from the very beginning.
Makes absolute sense. The next question for you, Troy, is in today's environment, where do you see the most stable and attractive opportunities in the oil and gas space?
Well, there's two things working really, really well right now, and I can tell you that. I mean, let's just say working interest is real simple. I got a lot of income. I don't want to pay taxes, so I got to find Eckard, drill wells, save the money, etc. That's great. But if you ask me as an industry expert, what's happening is in the last 24 months, 245 billion in M&A. One big behemoth like Exxon bought out Pioneer for 60 billion. So what's happening is they're combining forces, but they're trimming off what they call their fat. Well, their fat is oil and gas wells that are 5 years or older, producing a ton, millions of dollars of income, but they go, we'd rather sell that off to create cash to drill brand new wells where we get the greatest lift on our stock. So right now, there's a massive divestiture going on of 50 million, 100 million, $200 million worth of producing wells that are, I mean, they're golden nuggets in the ground for people like you and me, but they're giving them away because there's no buyers in the market and there's no financing. So what I've noticed over the last 18 months, for those of us that have the capital, or we can aggregate the capital like Eckard does, we're buying tremendous cash flowing assets from day one that can generate 11 to 25% cash on cash return. And literally, I believe the oil companies selling it are taking a 20, 30% discount because they want to get the cash and there's no buyers in the market. So I think this is going to stay in place for the next 36 months because President Trump has clearly said, I think oil should be below $60 a barrel. So a buyer has to go to their bank and has to create a model, and the bank's going to say, I want you to show me this at $50 a barrel. Well, I can't buy it at $50 a barrel. Well, we think Trump's going to get it there. Well, regardless if he does or not, those that are sophisticated in financing are making the borrowers put that kind of bad economics on the commodity price at a lower number, which means there's no buyers. So Eckard is able to navigate and find assets of that caliber, which means that is the golden ticket for the next 36 months.
Love that. Love that. Before we wrap up, because I feel like I could go on and on and on, and there's so much value you
We
bring
can do
here.
another one.
We'll probably have to do another one after the summit. But let's talk about 1031 exchanges into mineral rights. And then on the back end, I know that even you can 1031 into real estate potentially. So let's talk about 1031 exchanges and investing within retirement accounts or Roth IRA strategies that people can.
And I'll be short so we don't take too much time. Two things. Mineral rights qualify for your self-directed IRA. Probably 70% of the money invested in our almost $800 million of minerals came from self-directed IRAs. It's the perfect asset. No expenses, no liability, checks every month. Great compounding, right? No taxes paid. So that's number one. Number two, the 1031. It is amazing to me, but probably 99% of people in real estate have no idea you can transfer a 1031 exchange like kind from a rent house or apartment or self-storage into oil and gas, mineral rights, okay? Now, you don't want to do it into working interest, even though it's real estate, because I don't want to take a gain and put it in something that creates a loss, which is what working interest is supposed to do, create a loss. I want to use that for my active income. But I can take a 1031 and roll it into mineral rights all day long. And the nice part about that is we always have active portfolios. So you say, hey, I just sold 2 rent houses. I got 800,000 I want to roll. You can spread it between different portfolios. You can activate it very quickly, and you're cash flowing within 180 days at a range of 10 to 15% cash on cash return. So it's one of those tools that most investors are unaware of, but is an unbelievable tool that many have figured out and are using it to complement their traditional real estate portfolio. And if you want to sell your mineral rights in 3 or 4 or 5 years, we have an online market that's called P2P. You can sell those and then roll those right back out of a 1031 back into traditional real estate if you so desire. So it's an easy asset to come in and out of from the standpoint of being able to do a 1031.
Love that. Troy, what's your opinion on what a healthy asset allocation into oil and gas is, right? Because I think the bigger question, like when they're looking at it from above, is what percentage should I be allocating to oil and gas investments?
Well, without pretending like I'm a financial advisor, I'll tell you, here's the way I see it. I think it really is based on your own personal financial needs. So let's say I'm retired and I'm worried about being 65 and I got to have access to liquidity. I might put 5 to 8% in oil and gas, just because it's not as liquid. I am up and down with commodity prices. I know I have a declining asset because we're producing reserves out of the ground. If I'm in a much higher income earning phase of my life, 40 to 55, well, I'm putting money in there that I don't need because I'm making new income next year. I'm really parking those assets so I can generate a high rate of return. And I'm trying to compound that by buying minerals and working it every year. And I want that to be a nice fat portfolio, let's say in 15 years. So if I start with maybe, 4 or 5% of my portfolio, that's great. Maybe by year 3 or 4 or 5, it's increased because I'm reinvesting the cash flow I have. And you and I and all of us high income earners in the same boat, we know how much money we want to live on, and the rest we want to create wealth. Well, if I have that excess cash of wealth money and I'm putting it in oil and gas, I want to see how fast I can compound it, push the tax liability down the road, and be able to use that free cash flow to add to my asset pool. It's what I've done for 41 years since I was 20 years old. And I can tell you, I've been extremely happy with what it's done for me over 40 years.
Love it, love it, guys. I'm sure all of you really want to learn more from Troy and see what opportunities they have. We're going to have a link that's attached to the show notes where you can get in touch with his team. And again, like I said, if you are looking for more tax and wealth strategies and you're looking for ways to replace your clinical income while being tax efficient, then join us at the Physician Freedom Summit. That's generationalwealthmd.com/summit in lowercase. Troy, I also know you have a YouTube channel and you're educating, and probably also have I'm not sure if you have a podcast or not, but any other resources that you want to lead people to from an education perspective?
Well, we'll have that sent out to you. I do a podcast called Talk with a Tex of Money and Life. We have a new one coming up, which is really going to be talking about financials and what we want to do to try to protect ourselves from liability. And really, at the end of the day, at 61 years old, I really want to share 41 years of working with thousands of millionaires and entrepreneurs and try to prevent you from making the same mistakes they have. It's really fun to utilize that real hands-on experience over 41 years to say, look, not everything I say is going to be relevant to you, but there's a lot of lessons to be learned from the last 40 years of successful entrepreneurs that I've been able to learn and pick up from. So I'll definitely put those in the links and share that. And I'll see everybody in 3 weeks in California. Look forward to meeting everybody and seeing you at the conference.
Thank you. And I feel like we should bring you on periodically just to keep educating us and letting us know what's new in the
Anytime you
space.
ask me, I'm yours. I'm yours. Anytime you want me.
Thank you for doing this, Troy.
Okay, we'll see you.